Hey everybody, it's Ken, and I'm very excited for today. We got Paul Hendershot, and Paul works with CoStar. If you guys don't know who CoStar is, so he's a senior director of analytics. CoStar is big. CoStar basically bought up some of the biggest brands in the world, including apartments.com, homes.com, 10X. They are undisputedly the number one commercial data information company in the world right now. Paul, great to have you on.
Pleasure's all mine. Thank you. Thanks for having me.
So let's jump right into it because obviously you guys are like, you're the kings of data. And I love the fact that you have your hands in everything. I was looking at your website this morning. I mean, it's everything. You got retail, industrial, commercial, office, homes. I even saw you had a whole thing. You bought a company for hotels. So it's really, really cool to have you on. And I think what everybody wants to know is, what are you guys seeing, and where's all this madness going? Because these markets and these real estate classes, they're all, of course, they're all very different and independent of each other. But what do you see? What are some of the bigger trends you're seeing right now with your data? Because you guys are rolling out this quarter right now, right?
Yeah, we just rolled out actually the most recent quarter data, and our forecasts have just been updated. And realistically, really is, we're seeing so many different storylines depending on the specific asset type. In terms of obviously just the big headline industrial was kind of the darling throughout the pandemic. We saw record levels of absorption, leasing, construction. Amazon alone here in Dallas-Fort Worth is the largest industrial user of space in the Metroplex with over 18 million square feet. And just to put that into perspective, like big companies like FedEx has like 4.5 million. So they've definitely dominated the market. But the latest headlines I've seen in a few publications today is they're starting to, they might have overextended themselves a little bit. But in terms of where the market is, in terms of industrial, I think we're going to see, as long as demographics is destiny, kind of like the multifamily market as well. When you take these high growth Sunbelt, non-gateway markets, and just the number of people moving, Dallas-Fort Worth is adding 120,000 people a year. Austin continues to have the same story, San Antonio and Houston as well. And it's just one of those things where if you just look at really, the population growth in Texas alone, we've added over 4 million people over the last decade. That is the equivalent of Oklahoma moving or Oregon moving to Texas, which is rather unprecedented. Wow. So as long as I think that activity keeps driving, the industrial market fundamentals will remain solid. In terms of the office, I think there's a lot more question marks with the office market than we anticipated. Obviously, the hybrid return to work, just has really caused a lot of uncertainty. One area I'm looking at really closely is the amount of sublease space on the market. We continue to see just a groundswell of sublease space, just really affecting rent growth. Very few metropolitan areas are experiencing any true rent growth right now in the office space. Multifamily, I think, there's been a lot of, it's definitely, we're seeing the strong markets, I think, are getting stronger. Those Dallases, the Nashville, Charlotte, Phoenix, they are in a strong position. Well, I don't think we'll see double-digit rent growth. We're not forecasting double-digit rent growth next year, but I mean, 2021 was a record year. Pretty much, like I said, double-digit rent growth and record levels of absorption, and even new trends that we'll discuss later, even in terms of some of the new building techniques and this build to rent market, really, I'd say coming into its own now and kind of spreading across the country. And the retail, you know what? Everyone thought retail was dead. Yeah. I call retail the Lazarus of asset classes. Every time you write it off, it just seems to reinvent itself. We had a lot of, obviously, e-commerce, total retail sales. E-commerce accounted for 18% during the peak of the pandemic. Now that has kind of gone back down to a normal about 14%, kind of where we were heading into pre-pandemic levels. And just in terms of where consumers are, I believe, the American consumer is truly the consumer of last resort, and we will spend our way out of this possible economic downturn like we usually do. But retail's on solid footing. One of the more interesting areas that I'm tracking closely is really the malls, and a lot of the adaptive reuse and this reimagining of mall space. I think that's one of the more exciting trends in the retail sector.
Let's talk a little about some, because I agree with what you said. I always tell people real estate exists for people, and if people aren't there, like, it doesn't do well. If they're there, it does well, and if there's more of them, it does really well. So it's really not that complicated. But so let's talk a little about demographic shifts. Things really changed. I've heard people talk about, some of these core inner urban cities. They call them donuts. Where the inside of the city, like, people aren't really living there, but they all moved around it, to these, what they're calling the donut zone. What are you seeing on demographics, and what do you think where we're heading with all this?
Yeah, I mean, I think, well, there's a lot of forces at work. One is the millennial age population is now they're no longer the cool kids that were driving all the technology. Now they're 40 years old, and they're the oldest ones, and they're looking to settle down, and they're really looking for either larger apartments in the suburbs to kind of have access to basically the school districts as they're starting to have children, and really, that's a consideration. And the second thing is we have the baby boomers that are essentially looking to downsize at the same time, which is also good, I guess, it's good for the build to rent market, and also the multifamily market is they're looking for more amenities and more of a sense of community. That's why we're seeing more pickleball courts in apartments than anywhere else. But it really is this migration to the South over the last, I'd say, 20 years has really shifted the political base, the tax base, and just looking at, like, Austin, for example, over the last decade, they grew by nearly 35%. Raleigh, North Carolina grew by 25%. Orlando grew by nearly 25%. San Antonio grew by over 20%. Those are strong growth numbers. And a lot of it is, it has to do with our favorable business climate, favorable, just climate in general. A lot of people decided they don't want to shovel snow. And also just where the jobs are going. That's where, the opportunities are. When you look at a place like Austin, for example, Facebook signed a huge, one of their largest leases recently, and it's really been transforming them. It really redefined them as not a government and college town, but a true tech hub. And we see this time across the Southeast and the Southwest. Right. Now, another interesting, particularly as it relates to multifamily, is there's more females graduating from college than ever before. And that means that they're holding off getting married till later in life. And we're seeing more educated female tenants looking for space as well. And what that is really changing is kind of the way folks are building apartment complexes to meet the needs of this kind of emerging demographic. In terms of the, what I call the sidewalk to sofa security, really, it's going to be more commonplace, more security, cameras, even single-use credentials is really going to transform the multifamily market.
what are some of the fundamentals and some of the drivers that make that happen? Because I would not have known obviously to invest north of Dallas had I not been there. Are there some things that people can look at from the data that would maybe help them make some good decisions in their investing in the future?
Yeah, I mean, and this is we go through this exercise with a lot of investors. I'm increasingly getting calls from around the country. I think the Canadians must have a chat group or something on Dallas, Texas, because we're literally getting a half a dozen calls from Canadian investors for some odd reason. But the things I look for are just look at the headline numbers at vacancy rate, because there is not that there's a threat of overbuilding, but you have to be aware of, let's just be aware of that vacancy rate. And right now it should be hovering right around 5% in most submarkets. And that's really kind of your first indicator of how the health of a market. And then look at the historical trends. What does the net absorption look like? How many units can you count on this submarket or this area absorbing a year? How much is currently in the pipeline? And is there a big delta? So is there anything that could basically, not say make the market unstable, but what is being built there? Is it a high quality asset? Is it going to be able to push rents? Or if you're a value add investor, look at the properties, look at the age of the properties around in that submarket and understand, okay, well, where you kind of really fit in that area. And those are a few of the things that I take a look at. And then it really comes down to, if you really want to get creative, with CoStar, we do have access to, the office, industrial, and even, retail data. Look at office leasing activity is and see where big companies are signing leases, or there's a lot of lease activity, because the same way retail follows rooftops, multifamily tends to also follow large office developments as well. And if you know where people are moving because a result of jobs, chances are they're going to want to work near where that employment opportunity is. And another phenomenon we're even seeing is in addition to what I call the Amazon effect, for the first time, we're seeing multifamily developers chasing industrial areas. One area that I'm really, really hot on is kind of the Forney. If you're familiar, it's out in East Dallas. It's kind of, I'd say, the next emerging industrial frontier. Goodyear just put a large facility out there. Amazon followed suit. There's a lot of spec building construction, and the industrial jobs of today are not the industrial jobs of the past. They're paying about $15, $20 an hour, which makes a pretty solid renter for most folks. And they're employing, these aren't just like the warehouses where you'd have 5 guys driving around a forklift. They're employing often thousands of people in these facilities, and they're basically looking for attainable housing or some type of affordable housing. So if there is a value play around there, you could either buy that and improve it, or even possibly build something up from ground up, because the land is probably a little bit affordable. That's what more affordable, and you'll find in some of the hotter markets, you want to say. But because they're building industrial, there's probably you won't run in the same not in my backyard type of situations, which you might come across in some of the more, if you want to call them, different, some of the suburbs around as well.
Hey, I'd love to have you back on again. This is great. Let's give this some churn a little bit, and then see where all these people go and what happens with all these different markets, and see whether we got inflation, recession, interest rates, all that kind of stuff. It'd be fun to revisit.
Yeah, I mean, it's been a blast, and I appreciate you having me on.
Yeah, Paul, as always, I appreciate your time. I know you're super busy and in demand, and I'm grateful that you took the time for our listeners. Thank you.
Thank you. Have a great day.
Cheers.